We're on.
Welcome to the Scott Smith Radio Show.
Something's terribly
Ready?
wrong with you. Yes.
Here we go. Quiet on the set.
Welcome to Get Justice with Scott Elliot Smith and Michael Morris. Hi, Michael.
How are you, buddy? It's good to have you in again. It is terrible out on the roads today, so I thought this day we would take to talk about car insurance rates. And you love insurance. Let's just take that for fact.
Insurance is a necessary evil, Michael.
Right, so
as you well know.
love might be a little bit of a stretch. Let's talk about, since there's so many accidents, that yesterday, actually Jim, the guy producing the show, posted that people weren't, the police weren't even taking accident reports yesterday. It was exchange insurance because there were so many accidents happening. So thank you, Jim, for posting that on social media.
That does happen.
So let's talk about the factors that inflate your car insurance. And you are an expert. You've got more than 10,000 hours in the field dealing with insurance, right?
Well, at least that. And
Right.
I wouldn't so sure I'm an expert, but I am certainly familiar with it.
Well, you know more than most.
Yes, I do.
So let's start with the personal relationship status is actually a thing that affects your car insurance.
Well,
right?
let's tell everybody what we're talking about.
Okay.
Everybody needs car insurance in Ohio, and you're required to have it. So you wonder why your rates go up and down or why your neighbor's rates are lower than yours. There's a lot of factors that go into why your insurance rates are what they are. And we're going to go through those today. There are several factors, and we'll see if we get through them all. But one of the first is location. Where do you live? If you live in an urban area, more cars, more people, that usually means more collisions, more claims,
More
more
theft.
payments, more vandalism, more theft. If you live in a zip code, they always ask you for your zip code. If you live in a zip code, it's a high crime area, your insurance rates are going to be up. So that hurts people in the lower socioeconomic classes. If they live in an area where there's a lot of crime, because they can't move out, because they can't afford to move out, they're probably going to be stuck with a higher rate with the same car that someone's driving on the other side of town.
And we should talk about a lot of this is going to be related to mathematics, right? I mean, especially when we get into the other pieces of this. Again, going by zip code, how many car break-ins or vandalism is going on, how many accidents in that area. It's all based on factoring, right? Or, I don't know if it's exactly called factoring.
In my experience of 35 years of representing people who are injured in cars and on premises and products, I have found that insurance companies are really a bunch of bean counters. They do everything based on numbers and statistics. So it doesn't matter who you are.
Right.
You fit in a category, and you could be the best person on earth, the most moral person on earth, the most careful person on earth. But if you fit in the category of everybody else who doesn't, it doesn't matter who you are. It matters what you are. And that's what they care about. So the first thing they want to know about you, Michael, where do you live? So they're going to start determining your rate of insurance based on where you live. That's a start.
So that you can control somewhat, right?
You can somewhat.
So I think it's funny when if you kind of put it together, people that are college age or as they get out of school, their insurance rates go down, and they think, oh, because you're a college graduate. You'll see a lot of commercials that if you just graduated from college, we can lower your rate.
That's right.
Well, statistically, that's going to happen anyway, no matter where you go.
Well, that is not a geographical location. That's a different factor that goes strictly to people with higher educations
Tend to move
statistically have less accidents than people with a lower education. It's just a stat. Now, you may say that's discriminatory. Maybe it is. Maybe it's biased. Maybe it is. But that's what insurance companies do.
I just wonder if anybody ever asked that question, because it does. I can remember I graduated from college. I moved out. And as you're gaining more property, it's like they want more money for your insurance to insure your boat, your car, your motorcycle, whatever.
That's right.
But you're living in a better area.
Well,
But we'll lower your insurance because we trust you.
there are more factors that go into it.
Right.
So they compare them all. The second thing is age, what we just talked about. Younger drivers are more risk takers. Their judgment's not so good. People have argued for years that maybe age 16 is too young for people to be getting a license to drive a car because they're not responsible, they're not mature. Well, in a lot of instances, that's true. But in a lot of instances, it's not true. There are kids that are 12 years old that are as mature as 18-year-olds.
And better drivers.
And better drivers. And more responsible, as far as we know.
Right.
But the point of the story is, statistics say younger drivers, mostly male, take more risks, have less better judgment and get in more collisions, which means more payments by insurance companies, and the more they pay out, the less profit they make, and that doesn't bode well for the board of directors and their shareholders.
And again, all of these factors are based on insurance companies paying out to people that invest in those companies. So they are trying to not pay out. You have to pay into the system. They don't want to pay out. Insurance
is easy. We've talked about this before. They're like a casino, in my opinion. They do pay out some winners, but most of the time they win. Otherwise, they wouldn't be in business. So
I do love that when you see that billboard. I think it's on 270 where it says, we paid out over $10 million last month. But how much money did you bring in? Because you didn't give out all the profit.
And they brought in $1 billion.
Right.
Yeah. So, insurance companies do this for a business, and you're just a number, and I'm just a number. The second thing about age, Michael, is older people. Now, they carry the same risk as younger people. They're not as clear in what they can see. Their reaction time is less. They can't hear as well. They cause collisions too, and their rates go up.
One of the things I'd like to know about these statistics, and I'm not saying that you know this, but statistically there's got to be this peak number, that like 25 to 54-year-old, where that insurance sell has to be pretty consistent, right? So as people are living longer, you're not really taking someone's keys away if they're 84 years old. If they're in optimal health and they live in Florida, they're still driving. Their judgment might be impaired the same as it would be a 16, 17-year-old. But it's not the factor that I want to know if it goes into this is experience. If I've been driving for 60 years, I should be more experienced. My judgment should be better. Maybe my faculties aren't that great at 70, 80 years old. But you would think their rates would be lower, but it doesn't appear to be so.
No, not necessarily. I mean, again, insurance companies go on statistics. You pick out an individual who is 84 years old, got their wits about them, reaction time is good, hearing's good, sight's good, they're fine. Let me equate this to judges. There's a cutoff at age 70 for judges to be able to run again, to run for office again. Federal judges can be on the bench for 100 years until death. But state judges in Ohio have a cutoff. And some judges who are over 70 are great judges, still have their faculties about them, still can rule in an even, unbiased, impartial manner. And some lose it before they're 70. Some are younger than 70 and are not good judges at all. Age is an issue they use for judges of whether you can or cannot continue to be a judge, which is probably unfair. It should be more based on their qualifications.
Their merits and
Yeah, but in terms of driving, the older you are, statistics show you are not as good a driver. More likely to get in collisions, more likely to have claims, which raise the rates.
Right.
So that's what it is. Now, when you get to about 30 years old, for men and women both, apparently they mature enough, according to the statistics, that they become better drivers. And it's equal for men and women in their 30s. But younger drivers, men are bad drivers compared to women.
It's all Mad Max when you're like 21 to 25 years old, if you're a man.
Yeah. I mean, risk aversion is not an issue. Right. So, as you get older, you kind of figure out that's not a good idea to drive that way. Maybe I shouldn't do it. Maybe I broke my arm. Maybe I hurt somebody. Maybe I got too many tickets. Maybe I'm in jail. But the point is, as we go to kind of figure it out, well, statistics show, if you look at the insurance rates, that's when it happens. People in their early 30s, they become better drivers. They get better rates.
Can we talk about, so you went from the 30-year-old is kind of that median divide where everything is kind of even. The one I really want to talk about is relationship status. And I don't mean...
As you would.
Yeah, because I think that's a big thing. Personally, if someone's watching on Facebook and you're alone, this is really going to mean something to you insurance-wise. And if you're listening on the radio, don't be alone on a Sunday. The relationship status for men and women, your rates actually go down, right? If you're in a relationship.
According to insurance companies, statistics show if you're a married person, you're more likely to be a better driver, get in less collisions, maybe don't live in areas that are bad by way of crime or vandalism or otherwise. And that's a factor they consider in lowering your rates or raising your rates.
Well,
so
household income should be higher, too, if you're married, right?
Well, but statistically, again, it's like the casino. some guy's going to win and go, boy, that's great. How do they afford? This guy wins all the
Are
time.
you talking about just their relationship status that they're winning? Because there's a lot of people that got married and they're not winning.
Well, that's a whole different topic.
Oh, okay. I wanted to clarify.
That's divorce
for
law.
Okay,
I don't do that.
Okay.
Unfortunately.
Yet.
Or fortunately. Yeah. But statistics show if you're married, you're less likely to be in collisions. Your rates will go down. Now, you could be married and still be a reckless driver, but you're going to get the benefit of being married as a factor to reduce your rates.
On both ends, male and female both get it, right?
Yes.
So the key is get into a relationship to save that let's call it $10 to $40 a month. Find someone, fall in love, get that insurance down, right? That's what we're recommending.
No, we're not recommending that.
But we're kind of close. I think now we can move on. We've exhausted the relationship.
For you, Michael, that's a perfect
That's the
idea.
only goal in
But
life.
not for everybody else.
I'm looking to reduce expenses. It's not about happiness. It's reducing expenses.
That's right. You're like a corporation.
Yeah.
You want to keep your costs down.
I want a relationship like an LLC. I need tax write-offs. That's what we're looking for. Yeah.
That's right. Well, that's the IRS. Do you file married or separately or single?
I still have time.
There you
I have
go.
till
You have
April
time.
15th.
Another factor is driving experience. Obviously, this is pretty easy to understand, but if you're a teenager and you haven't driven for a year or so because you just got your license, your rates are going to be high. That's why your parents complain. Hey, I put you on my insurance and I'm paying 3 times as much. You better drive my car carefully. Well, parents preach as much as they can, but we all know statistically teens are more likely to be in collisions than older adults.
When does that kind of cut off? Because is it between like 16 and 21? I know that there's not everything is the cookie cutter, but between 16 and 18, it seems like that's when it's at its peak.
Well, I don't know the exact, but 16, 18 is just a start. It's probably more 16 to mid-20s because the rates show once you get into your 30s, the rates start to go down or level off if they're not already down. So, you've got kids in their teenage years and their 20s that are a problem, according to the insurance companies, because their rates are higher.
Even without tickets.
That's another factor. So you can't take one factor in a vacuum. They all come together with all of these factors together. Where you live, what your age is, what your marital status, all those come together, and then they plug it into a software program in their computer, and they spit it out, and that's your rate.
Well, I have another question that goes along with that, sort of. Credit history. If we're looking at the age of somebody, right? It is so easy now for anyone to get credit cards or to get credit. If you're between 16 and 21, you can ruin your credit, which that will also factor in your insurance, correct?
Well, it comes, credit rating is a determining factor only because people with lower credit ratings by measurement are in more collisions, have more claims.
Probably are driving lesser vehicles.
May have fraudulent claims. Everybody likes to talk about frivolous lawsuits. They're rare.
I know I do.
They're rare, but when they do happen, they hit the newspaper like it's biggest news since they, invented the Whopper. Yeah. The point is, lower credit ratings equate with people who have more claims, more collisions, and insurance companies pay out. So, whether it really means anything or not, you're down on your luck. No fault of your own. If you're in that lower credit rating, they're seeing you as maybe a less responsible person. And you and I have talked about this. People who cause collisions, a lot of times you'll find don't have enough insurance, don't have any or don't have enough. That's why you need uninsurance and underinsurance. Because for some reason, statistically, people who don't have that type of insurance probably fit in the same category as a lower credit rating.
Right.
Maybe younger, maybe single. They put them all together in this very sophisticated software and they spit out a rate. So credit ratings probably go hand in hand with people that don't even buy enough insurance.
Well, or don't have a quality insurance program. Like if you have bad credit, the one that always makes me nervous when I see the commercial, no credit, bad credit, you can still get insurance. What are you buying? Because if you have no credit, bad credit, you don't have that much expendable income.
Question.
You're buying the state minimum, right? If that person hits you in their 89 Cavalier with 30-day tags on it, you're in trouble as the person who's going to make that claim, right? You've been
let's talk about that. That's an important point. In my opinion, those companies, and there are a few companies, one's in Columbus, all they sell is minimum policy limits coverage. So in Ohio, it's $25,000. If you cause a collision, that's all your insurance is going to pay out. Well, you may kill a busload of children, and all you got is $25,000. That's why you need uninsurance and underinsurance. But what these companies are doing, in my opinion, is trying to beat the odds. They've already done the math. What they're saying is, I'll take all the premiums of all these people who are buying low minimum insurance rates, and hopefully I'll get more in premiums than we'll pay out. And we're going to limit our losses to $25,000. So if they do more damage, too bad, we're only on the hook for $25,000.
But it goes back to the statistics and the mathematics. There's the bean counter that said, if we get 1,000 of these and there's one accident, look how much profit you're still making, and you're only paying out $25,000.
I could be wrong, but that's how I see it. I see it this way, and it makes sense to me that these companies are betting the odds. They've already done the math. They said we can make money. We can make a lot of money if we just insure these guys, but limit our damages, limit what we're going to pay out, because we can get more people who pay premiums, and a lot more people that pay premiums than the claims we're going to have to pay out. It's a mathematical equation, statistics.
Well, speaking of statistics, we're at 16 minutes. We have to take a break, but we will be right back with Get Justice with Scott Elliot Smith. All right, so we covered...
Get Justice?
Get Justice.
Need some?
I thought you said that's what we're doing.
I could not stop laughing when we started because I was like, Get Justice with Scott Elliot Smith. Okay, so...
You should say it
You're
like,
not funny.
Get Justice.
You're not funny.
Scott
I'm
Elliot
not
Smith.
funny. I can't say
Why
like
don't you be the bring us back, Jim? You can do it better than anyone.
Welcome back to Get Justice. I'll do it off,
Why don't you do
off
it?
camera.
Yes.
Welcome back to Get Justice with Scott Elliot Smith.
I want you to bring us back.
Oh, okay.
Okay.
I
Give
can
us
do
a
that.
little Elliot
Yeah.
Ness. Now listen,
Scott Elliot Ness.
we kind of touched on gender, so that's done. I've got your last insurer.
I've got a few more factors. We can go off this. I mean, we covered the big ones, but
Yeah.
About 10 more minutes.
when you digress, and the last question was an excellent question, we can always do that.
Okay.
Okay.
I think about 10 more minutes. You sure?
Yeah, do
Okay.
it.
Do it, Jim.
Okay.
It's Taco Tuesday.
Here we go.
Yes, it is.
Welcome back to Get Justice with Scott Elliot Smith.
Thank you, Jim. Hey, Michael.
Jim's a guy that doesn't believe in designated hitter, but he just jumped in the show to help us out with bringing us back.
He does much better than
All
I do.
credit to Juan Thomas. Thank you.
All right. We're on the factors of what factors into your insurance rates.
Right.
Not said very well.
Yeah, the last thing we touched on was, we were talking about insurance companies that have you buy the bare minimum, the slowest or the lowest amount, so they don't have to pay out the biggest amount. And you touched on why you need underinsurance, so I kind of cut you off there.
Well, like I always preach on this show, if you have car insurance, you need uninsurance and underinsurance at least equal to your liability limits. Liability limits are what you pay out if you're at fault. Uninsurance, underinsurance is what your company will pay you if the person who hit you has no insurance or doesn't have enough. Always have uninsurance and underinsurance. Always get it as high as you possibly can. It's not that much more expensive when you hear someone saying, I've got $100,000 in uninsurance and underinsurance. It's not that much.
Right.
It's not that much. Because you can't put a value on your family and your own physical health.
Well, I think people look at that number and they assume that's what you're paying. You know, they're looking at if you have $100,000 in insurance or increasing that policy, they're forgetting that it's $14 to $40 a month.
There you go.
It's nothing.
Yeah.
You're insuring yourself in case it happens. You're not spending that to get that.
That's right. Call an independent agent. Don't call an insurance company itself. Call an independent agent who will shop your insurance to several different type of insurance companies, let them compete with each other, and come back with your best rate. If you go strictly to one insurance company, they're going to give you nothing but the rate they want to give you. There's no competition, and they're going to tell you what you're going to pay and tell you what your coverage is going to be.
That's actually the number one mistake when I was researching some of the stuff for today, is people will call into that 1-800 number instead
Yes.
of an independent agent.
Right.
You're not really shopping around, and we talked about this a few weeks ago. You can't buy just a bulk plan. Like, and I'm not picking on Progressive, but that commercial, that there's a shelf. Oh, all you need is this, and that's not how it works, because you have so many different things that you have to insure. One policy doesn't cover, in a cookie cutter fashion. So you have to really have somebody price it out. If you have
Right.
a boat, a motorcycle, if you have kids that are driving.
Absolutely.
And underinsurance, umbrella coverage, is another thing that you have to ask an independent agent.
Right.
Because they're not going to offer if you call the 800 number.
Well, if you know what to ask for, they may have it. But they know. Insurance companies, in my opinion, bank on the fact you don't know what you're doing. You don't know what to ask for. You can't navigate around the insurance waters. So you're paying what they give you. And most people say, I've got insurance, I got full coverage. And then I ask, what is full coverage to you? And they go, well, I don't know. What you trust your agent. Well, you shouldn't trust your agent. Hopefully we educate you a little bit on this show so you have some knowledge, so you're equipped when you go to your independent agent and go, look, here's what I need, here's what I don't need, and shop it out for me and tell me what it's going to cost me. You'll be surprised when they come back and go, I can cut your rates down to, $200 or $300 less than you're paying semi-annually.
Right.
And you go, gee, that's $200 or $300 I could use.
Right. And that's increasing your coverage, too.
And having better coverage.
Right.
Yeah.
I want to talk about, because we're almost out of time today, but your last insurer was a factor. Who you were with last, or your previous insurance company, that can affect your rate because, again, if you're jumping up from that minimum coverage person to, a well-known company, that can affect your rate too. Obviously, it's going to go up because if you're buying bare minimum and then you're getting
more
umbrella
coverage,
under insurance,
it's going to cost you a little more.
Right, but that's a good thing.
Yeah, it's a good thing. Look, insurance companies are all competing for the same population. They'll cancel you if you fit the criteria of being high risk, but they want your coverage. If one company cancels you, the next company is going to insure you. Don't be too afraid of that. A lot of people go, gee, I didn't want to make a claim because my rates would go up. Well, they might, but that's why you pay for insurance.
Right.
You have to compare what your deductible is for that and how much it's going to cost you. But sometimes you just use your insurance. Don't be afraid not to use your insurance.
Do you see that a lot? That people, I know I've heard that before. I didn't want to make a claim because I don't want my rates to go up.
Right.
They're not going up $1,000. It might go up.
They may go up a little
bit,
but it's over time. How long you've been a driver? How long I've been a driver since age 16? I've got a record of whatever it is. My rates are relatively low, not in collisions. Don't get many tickets. That's all good. It's your driving record will be compiled over a period of time. So if you're switching insurance companies from, say, minimum coverage to full coverage, whatever that is, if you know what that is, including uninsurance, underinsurance, collision, and deductibles that go with it, well, they'll look at all the things about you, and they'll decide that, hey, this guy or this woman is a good, low-risk insurer. Insurance companies love us because we don't make claims.
Right.
We don't get in collisions. They make their money off of us. They lose money off the high-risk people, so they try to adjust the rates for them to be higher and keep ours not low, but plateaued. Insurance is expensive regardless, but
you don't have a choice. You
don't have a choice.
Regardless. So if you're going to do it, you might as well invest in it because it really is what's going to take care of you and your family in the long run. And again, over time, if you can keep shopping this out. I think the problem is people will get with an insurance agency, and the independent guy, and well, that's my guy. So they're not going to shop it.
They're loyal.
Right. So then you feel
that's
bad.
my barber.
Right. You feel bad saying, listen, can you find me a better deal? You're still going to stay with that guy.
Yeah.
But they don't. Then they feel like they're taking money out of his pocket.
Well,
it's
another
your
thing,
money.
Yeah, well, another thing to know about independent agents, not all independent agents have the same insurance companies. They have a stable of insurance companies. Like one agent may have 10 or 12 companies. Another insurance agent may have a different set of 10 or 12 insurance companies. So go to more than one independent agent. They will have more than one insurance company to shop you out. You may have a very unique situation. You may end up paying so much less you'd be surprised. But it's worth the shot.
And that's what they're there
Do
for.
it on the phone.
Yeah.
Do it on the phone.
Never do it in person because that's
No, you can do it in person.
No, I'm just saying when you do that in person, you shake that person's hand and you see the picture of their kids, and then you're just like, whatever you want, man. I know you got to make money. That's the worst.
Well, people's eyes get glazed over when you talk insurance. Like the agent says, "Here's your full cover. Here's your policy." You go, "Oh, good. I feel good. I have coverage now. Don't know what I have, but that stuff's all Greek to me." Well, it really isn't as complicated as it sounds.
Right. Why don't you wrap us up? Do you have any key thing that you want to end this on? Because we talked about basically 5 or 6 things that factor in your car insurance rate. What's the biggest tip you could give somebody?
Try to be a good driver. Try to avoid collisions. Try not to make bad judgments when you drive. Pay attention. Don't text when you're driving. Follow the rules of the road.
Can I revise one thing?
Sure.
Try. We got to get rid of that.
Okay.
Like you just said, do.
Try not.
There is no try.
There is no try.
Yeah, right? So just
Either do or do
all
not.
those things. Yeah, do or do not. Well, that's it for this week. I think it was educational, and you made it a lot of fun today.
Great. I'm glad you enjoyed it.
Thanks for listening to Get Justice with Scott Elliot Smith. I didn't know whether you wanted that on the end. Put that on the end? Okay.
How do you
Hit that bottom corner for him, Jimmy.
And folks watching on Facebook, please try and be a good defensive driver. Watch out for the other guy. Do it. Don't try. Do it. And get married.